Good afternoon, everyone. In today's video, we're going to do a deeper dive into the stock volatility box's performance for today. Now, here I have a table, or three different tables, excuse me, summarizing some of the ways that we're going to take a look at the data. Keep in mind, anything on this table here appeared on our live scanner between the hours of 6:30 and 10 a.m. Pacific and stayed on that scanner for at least 3+ minutes. Again, just to remind you, the scanner is a machine inside of the stock volatility box platform. This updates every 15 seconds or so with any new trade ideas and opportunities where we have volatility box breaches. So we're going to start off by taking a look at the data here with these three different tables, and then I want to dive into three specific examples here. The first is going to be around Deere, which reported earnings today. Then we'll take a look at Space, and then we'll also take a look at Novocure, which appeared on the squeeze signal scan a couple days ago. So I thought three different opportunities here where you can combine daily charts along with some day trading to really give you an idea of how you can use the platform to work for whichever setup you like to trade. All right, so let's start off first by taking a look at stocks with regards to time and trade from when they appeared on our live scanner. Now, anything less than 5 minutes here, you'll see the P&L was negative 227, which suggests that really if you were to get stopped out today, you found out fairly quickly. Then 5 to 15 minutes today was that sweet spot. You'll notice 5 to 15 gave us positive 579, which is the highest P&L for the day. And then as we started to increase in terms of time and trade, you'll notice the P&L here also started to decrease. So I thought that was fairly interesting. The sweet spot today was very clearly that 5 to 15 minute zone. Now, if we switch over to the hour, so this is the hour in which the trade actually set up. So this is 6 to 7 a.m. Pacific, 7 to 8 a.m. Pacific, 8 to 9 a.m. Pacific, and 9 to 10 a.m. Pacific, which is the cutoff here. You'll see 6 to 7 was positive, 7 to 8 positive, 8 to 9 is where things got a little bit funky, and then 9 to 10 positive one more time. So only 1 hour here today in which really you were not profitable in terms of the trades that set up within that hour. But outside of that, 6 to 7, 7 to 8, and 9 to 10 were all positive. So all pretty good signs there. Now finally, let's take a look at this data using whether they triggered off of our aggressive or our conservative model. Now, the aggressive model is the one that I think triggers much more frequently. The conservative is our default usually only when we break outside of either our aggressive models or we have a catalyst such as earnings, which is going to be the thing we talk about with Deere today. Right, so you'll notice here aggressive longs today. We had 11 trade opportunities. Of those 11, 81.8% win rate for a net P&L of positive $3.43. Aggressive shorts today, we had the most opportunity in 24. Net P&L here, win rate of 62.5% and a net P&L of positive 36 cents. So despite that 62.5, it was still nice to see this being a positive number. And of course, the aggressive long here pretty much carried that in terms of the net P&L for the day. And then finally, the conservative longs, only 3 trade opportunities there, but all 3 were winners for a net P&L of positive 1.36. And so again, the sweet spot today in terms of optimizing for net P&L, aggressive longs. It was also pretty nice to see that all of the conservative longs that actually hit the live scanner actually did give you the target that you were looking for before hitting the stop. So that was nice to see. Now let's go into some specific examples here. We said we'd take a look at Deere, Space, and Novocure. All right, so starting off here with Deere first, if we come over and we take a look at the earnings data, you'll notice that it reported earnings today before the open, and we had a pretty decisive beat on the actual estimate, but Deere in the morning was still crashing hard. Now, if you take a look at what the volatility box levels here, this is the conservative volatility box levels gave you, they gave you a very interesting zone in which you expected Deere price action to really stop and really start to reverse. Now, Deere starts to first appear on the live scanner when we have price action break our clouds right here, and that's where it appears on the live scanner. Then we go outside of our clouds here prior to getting our edge signal confirmation, and then once we actually do get that confirmation, you have really a much cleaner pathway towards the top. Now, this was a much more aggressive trade. I would argue that per the rules, this was actually an invalid trade, given that we had already broken outside of the clouds. However, for those of you that are looking at either trading Deere, adding Deere as part of your longer term portfolio, you don't necessarily have a stop where this is something you don't mind withstanding, especially once you know it after you actually get the edge signal, right? So this gives you a very interesting place where you know that you don't expect price action to go beyond this. You're being able to buy on the way up as opposed to on the way down, and the edge signal confirmation really sets you up for some nicer moves in Deere. But ultimately, into the close here, we did end up inside of our cloud. So I thought that was fairly interesting where despite the amount of buying pressure you saw early on in the day where the volatility box lets you catch a little bit of this rip up higher, you still ended the day inside of that volatility zone that we would really be considering to look at as part of a trending move for the next day, right? So in terms of the max move here, 1.65%. In terms of the actual risk on that 1.65, that was right around 0.61% based off of knowing that we went outside of the clouds. So I thought this was one interesting example, a little bit different in terms of going outside of the clouds prior to getting the edge signal, but it's one in which you're setting up via the conservative models along with having a catalyst such as earnings when you've actually gotten a beat on that earnings. Now let's move on to the next example here, which is in space. So now in space, we have our aggressive volatility box plotted along with our conservative one. I'm going to leave just the aggressive so we can keep our charts a little bit cleaner. And space first appears on our live scanner when again, we breach our volatility box clouds right here. Once we see that, we're now looking for an edge signal confirmation. That looks like a bearish arrow in the case of a short, which we got right here. Once we got that confirmation, you also did have an opportunity to enter at the clouds or better. Now, for those of you that were looking to trade using options here, the 26.50s were going for something like 35 cents at the time of entry, and then at the time of target here, they were going for right around 40 to 45 cents. So not a huge amount in terms of incremental gains there. However, if you take a look at that as a percentage basis, I thought that was fairly interesting where you had a 10-cent return on a 35-cent investment, so a 28.5-ish% return fairly quickly here, right? This would be one of those trades that fits inside of that 5 to 15 minute zone for that 28% return on those puts. So I thought that was fairly interesting. But again, in terms of the actual move here from a dollar standpoint, a fairly small move. Now let's switch gears to Novocure, which I thought was the most interesting trade from today. And I'll start off by first building a case using our daily time frame chart here. And let's start by even making this turn off. All right, so off of the daily time frame chart here, a couple days ago, we had a bullish squeeze signal. This appeared on that live scanner that we built as part of the triple squeeze course, and that was the first thing that I think got Novocure on my radar. Then you really had price action just to continue to rip up higher there. Typically, once we see the squeeze signal, we want an entry at the market pulse line. That first opportunity came yesterday, and you'll notice yesterday we broke well outside of the aggressive volatility box, and today was the second opportunity here where I would argue that maybe this bullish setup may not even be valid anymore, especially if we start to see this market pulse go a little bit red. However, considering that you have yet to see that market pulse change, this is really giving you a slightly better entry on what would have been a normal entry right here, right around that 130 mark off of the squeeze signal if you hadn't waited for any sort of pullback, right? This would be considered normal heat that you'd have to deal with, especially given that this was the previous pivot point. Now, the other interesting thing here for those that were looking at Novocure on a slightly longer term time frame chart here is if you draw the actual extensions, we first bounced above. We hit the 786. 786 started to act as resistance, and today came all the way back down to that 0.236 extension, where really if we continued to break below this, I think you'd be retesting the lows. However, the ability to try and see if you get this slingshot higher move from here, and then now we go and break above even the previous highs, I thought makes for a fairly interesting trade idea. Now come back into a 1 minute time frame chart here. We'll load in the aggressive volatility box again, turn that on, and now we take a look at Novocure when it appeared on our live scanner. So now, first off, let's discuss yesterday's setup in Novocure, where you'll notice price action here breached the aggressive volatility box. You're looking for that bullish edge signal confirmation, and you never got that inside of the clouds until you had broken well outside of it, and this time you were even tagging the conservative clouds on Novocure. Right now we come into today's price activity. Take a look, and you should notice a little bit of a difference here. Instead of going straight outside of our clouds before seeing the edge signal confirmation, we see a breach of our clouds right here. This overlaps very closely with that 236 extension that we were just talking about at 116.25. Then we're waiting for an edge signal confirmation, which you get right here. And once we get that, the trade is a go, looking for an entry at the clouds or better, which we did get several opportunities of. You actually had to deal with a little bit of heat as well, going all the way down to 115.52, but we never tagged outside of our clouds before then seeing a fairly nice reversal, hit the target right away, which is this gray target line. line. And then once that happens, the stop has moved to break even, looking to see how high is high. Where into the close here, you saw that Novocure started to make a move back down. In terms of the max move that you saw from the actual entry point, that was right around 2.5%. In terms of the actual close here, that was only about 0.68%, where for those of you that are holding on for longer term in Novocure, that can make for a fairly interesting setup, looking to try and play a move up to that 149.66 if we see it prior to breaking this low right down here and then going into a downtrend. All right, so I hope today's video helps to give a breakdown of not only the stats around the stock volatility box on a higher level, but then also diving deeper into 3 specific setups and looking at different ways that you can use the volatility box to fit with your existing setups and your trade style, and using the live scanner to really do much of the heavy lifting for you. All right, take care everyone, have a great Thanksgiving holiday, and we'll see you in the next update.